very good afternoon, everybody. Good morning, good evening, wherever you are. It's a chilly afternoon here in winter in Harare. As you can see, we're all kitted up, except this chap here. And I assume it's because he's having his whiskey, but he deserves it. You had a good run in the Comrades. Tell us a little bit more about what happened.
Yeah, it was a long day. It's a fantastic run. It's epic, 88 kilometers, 21,000 runners.
That's not a walk in the park.
No, for sure. It's definitely not a walk in the park.
Yeah.
But it's.
But you've been doing this for a while, right? This is your fourth?
No, my third.
Third. Okay.
Yeah, my third one. They call it this year it's the down run. It was from Pietermaritzburg to Durban, but it doesn't feel like that at all when you're out there on the road because it's undulating. 6 months of training. 11 hours 41 on the road.
Well done. And I see there was quite a bit of Zimbabwean contingent there.
Yeah, so I can say with high conviction that it's one of the areas that we as a country certainly punch well above our weight. So the South Africans have the largest contingent there with about 18,000 runners. And then we're fourth after Nigeria and India.
Oh, who would have guessed? But well done.
255 Zimbabwean runners.
Yeah. No. Superb. Well done. Let's congratulate Rufaro on that brilliant run. What were your times this time around compared to the last?
Well, this year, because there's roadworks between Pietermaritzburg and Durban, so the route was slightly different. It was slightly shorter. I think it was two.
Is this your way of telling us that you were slower this time around?
No, I wasn't slower. I mean, last time I did 11:47. This time I did 11:41. But if you compensate for the difference in distance, because this year it was about 88, last year it was about 90. I was a little bit slower this year.
Ranga.
Yes, it's still a big achievement. Well done. I watched this guy starting, I think from his first run, doing a kilometer and struggling, and to see him doing 90 Ks, it's
phenomenal.
It's phenomenal. I think it just tells you that everything and anything is possible, even for us here.
So what are you drinking to celebrate?
Yeah, well, since I was down in that part of the world, South Africa actually does make some whiskey, some interesting blends. Three Ships is their award-winning whiskey.
I thought it was 3 keys.
No. Actually, yeah, 3 keys. 2 keys is actually Scotch. It's a cheap one. It doesn't have a great reputation, but it's Scotch. This is South African. It's called 3 Ships. They won a bunch of awards. This one is the 12 years. Aged 12 years. It's aged in 2 casks. It's unchill filtered. So, and I've heard nothing but good things about it. So I figured I'll try it. So, unfortunately, I've just got teetotalers here, so I'm not going to get a second opinion. But yeah, from the smell of the cork, it's very promising.
Well, we're going to find out at the end of the show how it's going. Here I'm having some Ugandan coffee, Lamarck coffee. It's a meat and duck roast. And I need a strong coffee after this long week. I'm sure this will do the trick. And Ranga, what are you having?
I'm just having water. Nothing hectic. Just some water. After a decent lunch, I just want water.
Has the day been that boring?
No, look, I've been away for the longest, missing quite a number of shows. So, look, I wasn't really prepared. I've lost track in terms of what needs to be done for one to prepare for a show. So obviously also trying to do the behind the scenes kind of thing, sort of eaten into my time.
So what does this mean? Does it mean we actually don't need a producer?
We probably don't need a producer.
Okay.
We'll get away with, like the last time he was away, we had quite a bunch of fun.
Okay.
Because we didn't have a guy, jumping up and down, giving us instructions.
Shouting orders.
Yes. So that would mean you'll be prepared for the show, but there won't be any crew and anything that you want for the show to get going. So you still need the producer. Look, it also says something about the crew, that they are able to hold fort. And that's what a leader should do, right? Everything can be centered around you. Exactly.
Okay, fantastic. Thank you. I think we've got quite a bit to run down. And I'm looking forward to this particular show. I think we've seen quite a number of events that have happened, that have changed. And a number of them, we're going to discuss them. I think the hyperinflation is something that we need to discuss. So just setting the stage, we're going to discuss that because this is the third time in 15 years that we're going through a hyperinflationary period. How long it's going to be? Well, how long is a piece of string? We will know. The other thing that we want to talk about the new auction system. I think we've got quite a number of things that are developing in our exchange market, and we would like to just find out exactly what's happening there and what our thoughts are. I think that would be interesting. We saw another SI coming out, and SI 108, and it's something that we want to actually discuss, and I think it'll be quite relevant. Then the other thing that we actually did this week, which I think our viewers will benefit from, is we took a dive into Nigeria. And what we wanted to discover was, they've just freed up their exchange rate market. We seem to have done so, and I do that in quotes because we're going to discover whether or not we have. But also we're going to discover what actually is happening in Nigeria. Could there be lessons that we could learn from there? And how is that particular market operating? And is this something that's just unique to Zimbabwe, or there are parallels that we can make with Nigeria? So I think that our viewers will benefit from this. This is to show you and to tell you that we've got a lot of researchers behind the scenes who are doing quite a bit of work to ensure that we bring this material to you, and we raise the level of discourse. So thank you very much, producer. I think it's necessary that we discuss these matters, but we do so from an authoritative perspective.
Even though we don't know what we're talking about.
Well, is that true?
Yeah, but look, I think
and having a tipple, well, some of us anyway.
For the viewer that has been with us from the start, I'm sure they're seeing how the show is actually developing, even in terms of the discourse, like you're saying. So it's actually important. And also, there's one thing that we seem to forget, that our viewership actually goes beyond our Zim market. I remember one of the viewers 2 weeks ago was telling us that they were getting feedback from their colleague in Fiji, who is a regular viewer of this show. So it also makes sense to every now and then dive into some of those markets that can be of interest, especially some other African markets.
Well, not just African.
Global.
Similarly,
Global, yes,
there's
exactly.
someone from Belarus that actually watches the show.
Very
and
interesting,
follows the
Belarus.
events. And we know that we've got people from Kenya who consistently watch the show. These are not Zimbabweans, but these are people who actually like what we're doing and gain a thing or two, or learn a thing or two.
Of course, absolutely.
All right, brilliant. So how we're going to start this is we're going to start with the auction, exchange rate auction market, the foreign exchange market in Zimbabwe. And what I want us to do is, so to set the stage, what we now have is we've got an auction for the SMEs, then we've got a wholesale auction that sets what the Reserve Bank has said is a floor rate. Then we've got a willing buyer, willing seller market. Then we've got a retailing price, which is 10% above the willing buyer, willing seller. The small auction happens once a week, but ideally the wholesale market should happen every day. And I think this week it happened twice. We've just come out of an auction where the rate now is 6,700 something, but 6,700, that's the new rate. And we've got the retailers that will put a 10% margin on top of that. So we've got quite a number of exchange rates in the market, and we've got the central bank still playing a major role in how the Dutch auction is actually set up. But the question I have, and what I want us to really zero in on, is what's the difference with respect to exchange rate? What's the difference between liberalization and price discovery? We see a lot of market commentators talking about this. So there are times when we haven't used the word liberalization a lot in Zimbabwe, granted, but we've used a lot of price discovery. We're using the Dutch system to get to the core of what the price is for Forex or for US dollar in the market. Rufaro, maybe you can set the stage for us. what's the difference really between a fully liberalized exchange rate market and a price discovery mechanism where we just want to discover what the market price is for a particular product?
Yeah, so essentially, given the exchange control framework that we have in Zimbabwe at the moment, if the auction actually behaved as an auction, as a Dutch auction, as advertised, then what we would be saying is that the price discovery mechanism of the official exchange rate market is a Dutch auction. But the market is not actually liberalized. You have to trade through this official Dutch auction system. And then in a liberalized market, you don't have constraints where you have to trade through a particular system. Anybody can transact. So I can sell my US dollars to you and we can agree on a rate, and Ranga can do so with another third party. When it's liberalized, then anybody can transact at any price. And so if I think I'm going to get a better rate from a bank or from a retailer or from a friend, I can transact
there are no
with any
restrictions.
and
There's no
it's all
priorities.
perfectly
No,
it's all perfectly legal.
there's no limit to how much I can
Absolutely. Whereas
access.
in our current exchange control framework, if I transact with you, that's illegal because foreign currency transactions are regulated and I have to transact with an authorized dealer, and in this instance, it's a bank, and the bank has to follow the rules and regulations as set down by the central bank.
So to help our audience, what would you say is a relatively liberalized exchange rate market in Africa? What would we term, okay, I think this particular regime is a liberalized exchange rate?
So if you look at a country like Botswana or Zambia, they actually don't have exchange control.
All right.
Okay, so in as much as I think that the South African price discovery mechanism is as free market as the Zambian price discovery mechanism, and Zambia doesn't have exchange controls, so it's perfectly legal
So
for.
it's more liberalized than South Africa, for example.
Absolutely. So,
Okay, so Botswana, Zambia, you would say they're more liberalized.
yes.
And then from a price discovery mechanism, which country would you say in Africa has the best methodology in price discovery?
So I think
Or
I think a lot of countries have great price discovery mechanisms. So South Africa, in spite of its exchange control, the banks trade currency in a way that's open and transparent, and
But a lot more restrictions. So if you look at Botswana, you would say it's more liberalized.
Yes.
And then South Africa, you would say
It's
the
very
price
heavily-
discovery, restricted,
regulation,
regulated.
but a very efficient price discovery mechanism.
Fantastic. Ranga, your
So-
comments on this?
So I think what's coming out is it's actually still possible to have a fantastic price discovery mechanism, even in an environment where there's some level of control. So look, ideally, it's best to have a fully liberalized market, but obviously for most of our developing countries, it may not be possible. But even with that, with those controls in place, what you need to have is a consistent price discovery mechanism so that people know exactly how much your currency is worth. And you know what it does? It takes away all the problem that we have from time to time, because most of them are related to the pricing mechanism. So, for example, how much is the Zim dollar really worth when you compare it with the rest of the currencies? Okay. And it's actually interesting that even our neighboring, there are some models that we should be able to borrow from, whether we want to go full liberalization like what Alfaro is saying about the Zambians and the Botswana, or maybe we can go the South African way, where if we think maybe exchange controls are what we want for one reason or another, at least let's have a proper price mechanism. But with what you've just said about all these different ways of trading currency in this country, I really don't see how price discovery can be achieved with there's a small market for this, a small market for that, and it tends to create a lot of confusion.
So
So
actually,
I've got an interesting anecdote I want to share around this, price discovery and liquidity of markets. So there's a colleague, several years ago who emigrated and to work for one of these big investment banking groups. And every year they would come back to the firm that I used to work for and ask for a statement so that they could demonstrate to the employer that they're not trading other equity markets and not disclosing their trades. And one of the interesting things that they said to us was that all other trading is restricted. They have to, not only do they have to report that they want to trade in a particular market in a particular stock, they have to get pre-approval to make the trade so that there are no conflicts of interest between them and their clients. But the one area where they could do whatever they wanted was international currency markets. Because the international currency markets are so big, they're so liquid, they're so open that it's impossible for people to corner them or do or for there to be a conflict of interest. So they could trade freely. So the hard currency markets, like the dollar pound pair or yen euro pair, or they are so big, they are so liquid, they are so open and transparent that it's considered by investment bankers impossible to manipulate them. Whereas, so that's one of the big benefits, I think, of liberalization.
Okay.
Whereas when you have these small controlled markets, then it's possible for...
I think you're actually getting to the heart of the matter, and we were going to go into that, which is your portfolio flows. That international exchange rate markets are also determined not just by the amount of goods and services that you trade, but you have people who are looking for a higher interest rate, and they're moving their money, portfolio money, managers who are moving their money between countries or across borders, searching for a return. And those also impact on the level of exchange rate. So when you have a fully liberalized market, then you don't worry so much about the transfusion mechanism in your economy, because you have everything else. The interest rates are set in a proper manner and they're market determined. Your goods market are also market determined. And it brings back to the question I have for you guys, or something that I want our audience to work through. And please bear with us, because there's something that we want this plane to land somewhere, but it's important that we clear the runway. The question that I want us to really get into is this. Is it possible for you to have a price mechanism in the exchange rate market, and then your goods market is fully liberalized, and then your interest rate market is fully liberalized? Or is it possible that the exchange rate market, you've got a price discovery within the exchange rate market, but then you have controls in your money market, and you have controls in your goods market? What's the impact?
So I think that the challenge with controls is, the path to hell is paved with good intentions. So
that's Friedrich Hayek. That's his book.
The road to
serfdom. 1943.
So and that's the challenge with these controls, is that human beings, it's our nature to respond to incentives. So and sometimes what's unfortunate with certain policy actions or the way certain markets are structured is that you create perverse incentives. You create arbitrage opportunities. When there are controls and the price is not a fair price, you create artificially high demand or artificially low supply, or vice versa. And it incentivizes certain behavior, which can turn out to be quite detrimental to that particular economy or market. And that's the challenge with, for example, in Zimbabwe, we have controlled Zim dollar interest rates, which are negative in real terms. So there's a carry trade, an arbitrage trade, where you borrow in Zim dollars and you buy non-monetary assets, and you just wait for inflation to erode the value of your Zim
or
dollar.
the exchange rate to move.
Yeah, and then
so Ranga, as an investment professional, I want you to answer this, because what it means is you would have people speculating in the exchange rate market. Anyone who invested in gold coins at the beginning, now they've made a fortune just purely on exchange rate arbitrage, and that's what Rufaro is talking about. Would you like to just expand on that, on why are we so fixated with the exchange rate and yet we forget the money market?
I think part of it is actually self-serving in a way. So just look at how the whole auction system has been working, and ask yourself who really has been able to access that currency, especially in a situation where the actual allocation is not transparent. Every now and then you hear worries or complaints that maybe not only is there inefficiency, but is also an avenue for corruption. So obviously that's why you find maybe we tend to favor having this kind of controls. But it's actually inefficient if you actually put it that way. Now, because you create a situation where there's no proper price mechanism, price discovery mechanism, and you've got markets. For example, we had the power market, which was more or less what the majority of people were using, having a rate which was probably
Which
much
is a
higher.
fully
Yes,
liberalized
yes.
market.
And then you had a controlled market, and obviously because this is the supply of currency is actually limited, you'd have a situation where now being able to access currency on the auction was some sort of a trade on its own, because you then pass it on to the power market. So look, it creates arbitrage opportunities for people.
And using what Rufaro's anecdote brings out is actually people shouldn't make money off exchange rate trades. Ideally, they shouldn't be betting against your own currency or whatever. It should be purely a price discovery mechanism, and nobody should be making any money whatsoever. And you make money either in production or in investments.
So what if you've got a situation where you actually can make more money by just doing the currency trades? Imagine you are privileged enough to be able to access money on the auction. Say maybe 3 weeks ago, where the rate on the auction and on the power market, in fact, it was like half. So wouldn't it make sense? Why would you produce?
Yeah. So
Yeah.
we call that rent seeking.
Exactly.
In economics, it's called rent seeking. So you would actually argue that that's what we've now got in our exchange rate market.
Exactly. So
money has moved away from
production to
rent sinking.
Because it doesn't make sense. Because look, this is like zero risk, zero cost. Zero risk to you. So why would you then take the production route when you can just go on the auction, get currency, and then
it's like the moral hazard.
Yeah,
we also talk about it in some of these handouts to farmers. You get all this diesel and other inputs, and you're not expected to pay for them. So what's your incentive? If you can just immediately offload them at zero risk, why would you opt to work hard and be subject to the vagaries of the weather and markets?
So in line with that, so we've got what they're terming price discovery market in our foreign exchange market. And if you think about it, $8.5 billion, we imported $8.5 billion. So $8.5 billion went through the international trades, our financial services international trade. And when you look at what the auction actually did, it did less than 800 million, which is less than 10% of that market. How true then is the price discovery mechanism if we're talking about a market that really just constitutes 10% of our international trade market?
There's a clear distortion, obviously, but that's more like a very common theme in Zim, where you want to protect something. Maybe it makes sense for expediency. But certainly we all know that most transactions are actually happening on the power market. And if there was actually... there's...
How much do you think is happening on the power market? So if we say about 800 million is happening on the auction, and then you've got about 8.5 in the formal market, where it's actually not changing.
It's not changing.
It's just US dollars that are just importing. Or if it's changing hands, in the banking sector, what they call twinning, that you don't necessarily see the Zim dollar transaction, or you just see
some back-to-back arrangements.
Back-to-back arrangement that has happened, and it could be barter trade, and it's all perfectly legal. And then you've got the power market trade. what do you think the power market rate is? How big do you think that
I
market is?
actually think maybe it's actually trading at a factor of five times or more
To the auction.
to the auction.
Okay.
Because that's where, in fact, most of the current trading activities are anyway. Ask yourself. I mean, every now and then they release the names of organizations that are accessing the currency, and one thing that I always check for is, are they familiar names there? So pretty much all the drivers of your GDP, most of them are not there. You see, but they also, so where are they accessing the currency from? So you hear them that they've got some mechanism where they can get currency from the other market. So it's probably, yeah.
Yeah, look, one of those challenges with analyzing the power market is we just don't have good data. You know,
he's using a particular proxy, and he's saying if you can't find the common names, if you look at whenever the central bank releases names of people who've actually gone through the auction, and if you look at the big GDP drivers,
you
can't find them. So how are they accessing currency?
So one of the things that is quite interesting when you look at these numbers, so if you look at a company like Delta, for example, the vast majority of their sales are in US dollars. And that's true for most importers. So they actually have cash US dollar sales, and then they import on the back of that. So to the extent that they actually need to access additional currency, it's limited. In fact, I suspect that the vast majority of them are able to generate all the hard currency they need for their import requirements through their sales. So you know, it always piques my interest when I look at these lists, and I'm wondering, so who are these businesses?
But Rivara, how would you know if, and I don't want to name names, if any of the big counters get money off the twinning arrangements or off the street market? Because we only see what we see is the 8.5. So
what the big corporates that, you know, because they're listed and they have to talk to us, tell us is that 60-70% of their sales are US dollars. So to the extent that they need to import, they have import requirements, 70% of their sales are in US dollars, so they can apply that to imports. And if that's not enough, then they need to go to the auction or come up with other arrangements.
Find them on the auction.
Yeah. So the big importers, most of their sales are in US dollars. So this is why I'm saying, this is why, you know, it's curious that when you actually look at the names that are published of the big players on the auction, they don't feel familiar. They're not corporate.
This is highly uncharacteristic of you're skirting around the issue. Even if you look at anyone who's on the list of buyers of currency on the auction market, if you look at their requirements, the auction market is probably meeting maybe 10% of their requirements.
The big players, but this is what the point I'm trying to make, that a lot of those.
These are. So I've taken away the big importers who are not on the auction, and I'm saying those that are actually on the auction. If you look at their requirements, the auction is only meeting maybe less than 10% of their requirements.
Okay.
A lot of the domestic manufacturers, it's less than, the auction is actually less than 10% of their requirements. Where they're getting the rest of their exchange rate, or the rest of their
so either they're getting it directly,
currency.
They're getting it directly or indirectly from the power market.
That's all we're saying. It's simple and straightforward. That actually, when you look at the auction, so we've identified that it's not a liberalized market, and then we're saying even as a price discovery mechanism,
it's broken. It's actually not an auction.
It's actually not an auction. Not just that, fundamentally, but it's trading less than 10% of what is actually happening in the market. And then if it's trading less than 10% of what's actually happening in the market, when you then compare it to the entire market, right, where we're importing about $8.5 billion, it means that the price discovery must be happening elsewhere, but certainly not the auction.
I agree. But where I'll push back slightly is I'll say that if the auction actually behaved like an auction, it would actually capture more market share in terms of currency trading. Because one of the challenges with the auction is that somebody will go onto the auction in good faith and be willing to pay what they think is a fair rate for currency. But because the auction rate is not an auction, it's managed, they are then frustrated because their bid is they're told, look, that's you can't be seen to be bidding this high.
That's actually. Let's hear what.
So what they then do is they say, okay, fine, this thing is not working, it's broken.
Yeah.
I might as well trade in the market that's actually functional, which is the power market.
That's very important for power. Actually, that's an intervention that we actually need to talk about, which is if the auction was what it says on the label, which is our price discovery mechanism, then why is it the only currency that we find at the auction is the surrender export receipts? So that which is forced to go on the auction is what we find. But exporters are not going on that particular mechanism freely, voluntarily, and offering their US dollars. Why? Why are exporters not going there?
Because the rate there is not good. So you've got it's actually manipulated. In fact, if only they would want to run an experiment and just ask the dealers what's the rate on the streets and try to be maybe within 10% of that, I think you'd actually see a lot of transactions that are going through to the formal market. Because look, in any functional market, people really don't have a reason to be holding on to the currency, to the foreign currency, because you are using your domestic currency, and you know that whenever you want foreign currency for you to pay for your imports, you can just go to the bank and transact. But our problem is you've got a currency that's being the pricing mechanism is manipulated. So and those exporters that losing 25% of their currency in terms of surrender, they actually feel robbed. And you actually see it even in terms of the bids on the auction, that these are not driven by someone who's really looking to get currency to import, but they're actually seeing an arbitrage opportunity. So that's the biggest problem that we have. But if we could just reduce the gap between the parallel market rate and whatever we term the official rate.
But it's actually the principle, right? You don't reduce the rate. You don't chase after the rate.
Yes.
If
you just open it up, you just make it what
the principle is. The parallel market is driven by full liberalization. So therefore, if you want to chase that, then you first thing that you need to do is to fully liberalize the exchange rate market. And with that, now let's come back to our case study, because it's an interesting case study. And bear with us as we go through this. Like I said, we need to land, and we need to land properly. And this might actually help the market. So this is the Central Bank of Nigeria confirms operational changes to its foreign exchange market. And this was on the 14th of June, 2023. And it says, the Central Bank of Nigeria, CBN, has confirmed the operational changes to its foreign exchange market. In a statement on Wednesday, Angela, Director of Financial Markets of CBN, the Apex affirmed the abolishment of the segmentation, and all segments are now collapsed into investors and exporters. Bear with us as I explain what has actually happened, right? So before this, interestingly enough, in Nigeria, they had different markets for the exchange rate. And in their markets, they had what we actually have here. So they have the Dutch auction system, right, for the small scale producers, for the SMEs. Then they had the Dutch auction system for the wholesale. Then they had what they call investors and exporters market. Then they had, it was about 5 of them, different segments where this was happening. And what they're doing, and it was a full price discovery mechanism, that's all those auctions were trying to do. And what has happened is they've collapsed all those different auctions, and they're going into a full liberalized market where it's just what they call, it's all been collapsed into investors and exporters. So they're saying the market that will trade is when you have FDIs or portfolio flows and exporter receipts. And everyone will bid in that particular market on a willing buyer, willing seller. So it's been taken out of the central bank's control, and it's now with the banks. It's now with the banks. So, will it work? Will it not? What do you guys think?
Look, it's a step in the right direction. And by the way, they're not doing this because they're just naturally reform-minded. The exchange control regime was failing, right? You had, I think, one of the major airlines in the Middle East and Africa actually pulled out of Nigeria several months ago because they couldn't get their ticket sales. That they couldn't convert the naira from their ticket sales into US dollars because the currency shortages, blocked funds, the same kind of things that would make sense to a Zimbabwean happened to companies doing business in Nigeria. And some of them just said, you know what, we can't. It's too hard. We're not trading there. And I think, they were alive to these complaints, to these challenges. And they said, and they interrogated it. And they said, look, this is too hard. Why are we, why are we complicating our lives so much? Let this thing float. And I'm impressed with them, but it's not like they actually for a country that had opened up the economy and made other significant reforms under Obasanjo, I think 20 years ago. This is one of the sticking points that
perennial problems. Yeah. In the statement, it goes further to say, all market participants and the general public are kindly enjoined to abide by these rules. Very Nigerian kind of statement. And it says the drastic change is coming amid the suspension of Goodwin Efemiele as the CBN governor last Friday by the president, Bola Ahmed Tinubu. So if you think about it, Tinubu in his inaugural speech as the new president, the first thing that he did is we're suspending the central bank governor. And then after that, he did two drastic things. The first thing is he took away the fuel subsidies. Believe it or not, but Nigeria is heavily subsidized, the fuel. So he took away the subsidy. And then after taking away the subsidy, he then liberalized the market. But Nigeria has gone through this numerous times. Will this time be the right play? Do you think that Tinubu has come in and he's done what must happen? Which is, price discovery does not work. What works is fully liberalizing the exchange rate market.
Look, I think it's good. It's some progress. Obviously, that's what you need from time to time, right? To try and shock the system. Because they've tried everything and it hasn't quite worked. And I think liberalizing the markets actually is going to be helpful to them, and to such a point that maybe it becomes political. There are political problems to do with, and politicians always change if they feel like they are not. It's not serving them politically, but I think it's good. This idea of having these silos is only going to create, like in our case, create pockets for corruption. You liberalize the markets, you have everyone who is looking for currency bid on a very transparent kind of market. I think that should actually help them solve their perennial currency problems. And look, it's quite some progress. Will it work? Look, as it is, it can actually work. But obviously, in Africa, the problem is always politics.
Can they stay the course?
Yeah. So I think one of the things that come out from what you're saying, philosophically, right, is there's this idea, and this is what has been tragic, across Africa and other parts of the world with economics. There's this thinking that all social sciences are created equal. So when you read a piece of literature, right, Tinashe and I can read the same book, and we can have a strong disagreement about what the central theme is or what the author was trying to teach us, in a certain chapter, and And if we were to get an arbiter who's like a professor in that particular literature, they would say as long as we argue in a way that's coherent, both views are valid and legitimate, right? Mm-hmm. And unfortunately, people like to bring this thinking to economics to say, oh, you know what, you the communist and you the capitalist, your ideas are equally valid, as long as you make them in a coherent way. The guy who wants to control everything and the guy who believes in free markets, you can equally achieve the outcomes that you're looking at. I think that economics is actually much more like medicine than it is English literature. There's things that work and the things that don't work. And the empirical data is very clear that certain ideas have failed and certain ideas. And so all of these places in the world that try to control their economies, they don't get the outcomes that they're looking for.
Glad to have you back, Professor. It must be the three ships.
Yeah, it's actually quite good.
Okay, all right. So here's an article by Faye Nimi, and this was published on the 6th of December, 2015, after similar reforms. So somebody comes, and the governor at the time...
This is also in Nigeria.
Yeah, this is in Nigeria. We're still in Nigeria. And they come up with what they term are reforms. And so they write this article, and it says, what can we learn from all this? The most obvious lesson here is that Nigeria has never quite figured out how to spend its own money. When prices are high, you save as much as you can. When prices fall, you open the tap and increase your spending. The point of this is to keep things going sturdy and avoid wild shocks in the economy. What Nigeria instead does is to increase spending once oil prices go up, and things like increased minimum wages, blotting the civil service, or even outright theft. Politics always manages to bully economics.
Sounds very Zimbabwean.
Right? So politics always manages to bully economics, with the exception of one time under Soludo, who was the governor at the time. This is how things have always been. Nigeria is never ready for when oil prices drop, and yet oil price dropping is as sure to happen as night following day. The moment oil prices crash, businesses and transactions that were perfectly legal suddenly become unpatriotic. Another lesson is that the politicization of the exchange rate, of the naira, is an unhealthy obsession in Nigeria. It gives politicians an incentive to wage war against reality by doing things that are economically harmful to the name of maintaining a strong currency. Economic nationalization comes into fashion. Why do we need to import rice when we can grow it here? That becomes the argument. When things like this happen, one way to defend yourself is by unleashing your reserves. For example, they then go into Algeria, which is again an oil exporter, and says when prices are high, they've built reserves, 150 billion worth of reserves. So when prices are low, oil prices are low, they're able to protect themselves. And this doesn't happen and they go on to explain since 1984, that since 1984, we've had serious problems in our exchange rate market. So coming to 2023, and Tinubu comes in and he's got a full liberalization. Can we stay the course? But reading that, does that sound familiar, Panka?
It does. If only you had not preempted it by telling us that it's a Nigerian writer, I would have mistaken them for a Zimbabwean. Yeah, I think the major theme there is this whole thing about politicizing economics. So whenever politicians have made a very unfavorable policy which is impacting the economy negatively, they will never take the blame. They always want to shift it to the business people, and it's very, very common in Zimbabwe, sadly. And that's one of the reasons why we keep losing businesses. So, like right now, with the way the rate has been running, there were already fears that some business executives will be picked, or maybe we'll see price controls or some other very negative policy framework that's actually blaming the business people for the problems we have. But they're actually victims. They are not perpetrators, they actually are victims. If only policymakers would learn that if they work together with the business people, have got just one motive: to make money. You see? And you can't make money in this environment. So it's actually not correct to say there will be one business person that would actually push and advocate for an environment that we have right now, because you don't make money in this kind of environment. You would look like you're making money. Just prior to this show, we were looking at the numbers or the market capitalization on the stock exchange. And if one was to look at the Zim dollar numbers last week, how the market was going up, you'd think, there's value that's being created. But there is no value that's being created. Because you see an Econet with a market cap of 300 million, a Delta 612. These are businesses that have breached the $1 billion market cap before. So there's no incentive to any investor, business player, for them to be perpetrating this kind of environment. So, look, it's so unfortunately, it's actually not good for investing.
So
I want you to answer this. So when you go for liberalization, it has consequences. So inflation immediately hits, because your exchange rate is going to move. And in Nigeria, it moved from 400 to now about 600.
Yeah.
Right? So inflation hits, prices are increasing. Fortunately, it's Tinubu's first year or first 90 days. So one hopes that he can ride the wave.
Well, he's throwing the kitchen sink and he's blaming the previous guy.
But do you think, and you have to stay the course, do you think you can stay the course enough? Because if once you've gone for liberalization, what you're hoping for is portfolio investment, because your interest rates, so inflation goes up, your interest rates ideally should then go up. And with the high interest rates, you're assuming that portfolio funds and FDI will start coming in to the country, perhaps 12 to 18 months' time. What happens if that doesn't happen? What do you do if you're the president?
Well, look, I think, firstly, you've got to build faith and confidence. And so far, the Nigerians have taken the right steps. They've also got to manage their deficit. They've got to try and live within their means. They've got to show some transparency. They've got to create an investment environment that's actually attractive for foreign capital to come in and make investments. So it's a big ask, because the thing about global capital, which people, especially in this part of the world, don't seem to understand very well, is that there are other options out there. So Africa's got lots of arable land, it's got lots of natural resources, but so does Australia, so does South America, so does a whole bunch of places in South. So global capital's got options, and we have to be competitive. And it's not a cakewalk. You actually it's difficult, hard work to create an environment that is sustainable, that consistently attracts capital.
I think going with your medicine analogy, it's a coterie of medicines that one must take. It's not enough to just liberalize the exchange rate market. You're going to have to liberalize the money market. You're going to have to liberalize the goods market, which I think is something that he has done. But over and above that, there are certain reforms that you must go through, very painful reforms that you must go through. But if you go through those painful reforms, then we will start seeing the change. So that's a good segue for us to sort of talk about Zimbabwe. We've had an interbank market before in 2019, right? Where we fully liberalized and we had a willing buyer, willing seller.
And then we just changed our mind somewhere in the middle of
the rate journey. Moved from 12 up until 25, and when we got to 25, it just got stuck at some level, and then the central bank had to take over the interbank market. What do you think went wrong there? Why couldn't we stay the course? What we're asking of Nigeria, why couldn't we do it?
Because it wasn't favorable to someone. So someone was not happy paying 25.
Can you be more explicit?
And obviously, look, it was good at the time, but then you started having some people maybe lobbying that maybe the rate has become too much for them, and even for government and other players. So that's the problem. So the moment that someone who can lobby and make a case that this high rate is not good and it's actually killing us and this kind of thing, you would tend to have those kind of shifts, because there are business people, your exporters, who actually would benefit from having proper rate, but there are also a number of players that the rent seekers, you were calling them, that obviously would get hit by any market determined rate, and obviously most of those ones have got access to the people who matter. And I think that's the problem that we'll always have, that maybe there are people who are always lobbying for some sort of a subsidy, because it's a subsidy in a way. Mm-hmm. You're actually taking away from exporters and giving it to the next guy. And I always have the question, who are we trying to really protect here? If, like I've said, if you look at the contribution to GDP by individual organizations, and you don't see maybe the top 10, 50 or whatever, why would you worry about
a market that's less than 10%
yes,
of
yes.
the economy?
And then we do it in such a way that we compromise the entire economy just to protect. Who are these people? Why are they so special? So I think we just need to stay the course. If we look, I'm sure you would discuss the current policy announcement and all, but I think what's very clear is controls don't really work. They actually work against you. And it also has to be extended to say even this thing trying to prop up the Zim dollar, it doesn't work. It's a currency. You don't need any kind of policy measure. People have to like it. There was a time when we were using fuel coupons as currency, 2007, 2008, but there was no governor, there was no one who came out and say, no, this is a new currency. People just do with something that works. The Zim dollar has to work for people to trust it and have confidence in it.
Very profound, Ranga, because you're talking about the price discovery mechanism in the exchange rate market, and yet there's no price discovery mechanism in the money market. And we will all know who benefits from 0% or 18% coupon TBs or 0% NNCDs. We know who benefits from that. So if they can go on this path of price discovery in the exchange rate market, why can't we have price discovery market in the money market and also in the goods market? And what we're seeing in the goods market, I mean, the president has actually come out and he has singled out a player where they say, you know what, if you think you continue to increase your bread prices, what we're going to do as a government is we're going to set up our own shops.
But is the price of bread increasing? It's just $1. What's increasing is the rate.
Well, Bakosi 2.0 is on its way. Is this how the government should be playing this?
Yeah, look, it's a mindset, it's a worldview that doesn't do well in reality. This idea that, if countries that issue currency could set whatever exchange rate they wanted and then issue as much currency to pay for things, there would be no poverty here on earth. Every country would be a first world country. They would have all the roads and hospitals and schools. Everything would just be utopian, right? But so the reason why these controls don't work is because what a currency is, what any currency is really, it's a proxy for value of real things, and you can't fudge that. You can't create $1 million and go shopping, or you can't create $1 million worth of Zim dollars and then go shopping and think you can buy things. The world just doesn't work that way. And I think this is the point that we really need to put out there.
So, in line with that, this is the third bout of hyperinflation. So, we've had hyperinflation in 2007, hyperinflation in 2019, albeit I think it was for a short period, about 3 months or so. And then that's when we then introduced the US dollar, and that went away. And then now we have 2023, we have another hyperinflation dose. I mean, how often do we need to go through this for us to actually learn? It sounds like we're not learning.
We are not learning, and it's actually becoming more frequent because when you look at the 2008, it came after a long time, but it didn't take long for the next one to come and this one to come. And it's actually, we Zimbabweans sort of anticipate these things. That's the biggest problem that we have right now. That because, I mean, a typical once bitten, twice shy. So we have lost value before. We have seen some of these policy measures actually destroying businesses. So what do? You do what you have to do for you to survive. If you are a supplier, if you have to withhold your product and make sure you only release it to the market that pays you in the right price and etc. But right now, I don't know why you would really worry so much about hyperinflation right now, given the split of transaction between Forex and Zim dollar.
Well, that's the threat, Ranga. The threat is, if this continues the way it is, what's actually supporting us is that we can use the dollar in the formal market. But what happens if they ban US dollars in the formal market? Our protective arm right now is purely because we can disassociate ourselves from Zim dollar and use hard currency.
So I want to answer that question directly. I think that it's a fantasy, this idea that we can wake up and ban US dollars. There's the only country...
Not in the formal market. I'm talking about the formal market. Because we've got $1 billion in our nostrils.
Yeah.
Real US dollars. And if tomorrow they ban the US dollar, that $1 billion will be exchanged at the RBZ managed rate.
Yeah, but the formal market will immediately wither and die because the formal market imports things as well, right? So take, for example, Delta, right? 67% of their sales are in US dollars, and that's what they use to import all their imported consumables and spares and other things that they require to run their business. So if we wake up tomorrow and we ban US dollars, all of Delta's sales immediately become Zim dollar. And the question then becomes, do the formal markets, do they have capacity to feed Delta everything that it needs to import to keep its production running? And I can say with high conviction that the answer to that question is no. So what simply happens is you just kill the formal market.
I think that's an important intervention that you're making there, which is, you know what, you might go after that 1 billion in the nostrils, but what will happen is if you take it away and you
only get to spend it once.
Exactly. And it's never going to come back. Then we start having shortages. But this thing is highly political, as we've seen in Nigeria, right? Our politicians are wont to just go after it. It doesn't matter what the consequences are. And especially going towards an election. Why wouldn't they go after that? Especially also, and you might as well speak to it, where we've seen Treasury take over the auction market, right? Where Treasury is now playing an important role, albeit at the moment is the surrender requirements. But if you follow through the argument, soon enough it will be the local nostril, whatever is in the local nostril, whatever in that is in that system, they'll go after it, they'll come after it. And that perhaps is why they've sort of let the rate run. Because they're saying if the rate runs to a level that we're comfortable with, then we force everybody to liquidate. I mean, already there's a 90-day liquidation. Whatever you have, if you haven't used it, there's a 90-day liquidation. Speak to that. Do you see them going after the nostrils?
So that threat is there, but I don't see that manifesting because they will actually create a bigger problem.
No, that's what Trufaro is saying.
Yeah, that would actually create a bigger problem than we have right now. And I'll actually reiterate this point again, that it's actually not necessary, because 75%, 80% of transactions, they're already happening in the US dollar. So there's a very tiny or a smaller portion of transacting that is happening in Zim dollar. And in fact, that number is dwindling and shrinking over time. So you don't need to create a whole pandemonium just to protect that little tiny auction market. I think, look, that risk was probably high and likely to, the probability were much higher in the previous regime. I think what we are seeing right now are just threats, but I don't think we'll get to that point.
I would like to
especially
differ with you.
Yeah, especially ahead of the election. No, I don't think so, Tinashe.
I would like to, politics.
I tend to agree with Ranga, but let's hear you first. Let's hear you, Tinashe.
I differ with you guys.
Do you actually think they'll come after the nostrils?
Well, because there is this small group of people that we're trying to protect. The reason why we have an auction, and I agree with you, the reason why we have the auction, the reason why they want to manage that, the reason why it is moved to Treasury, is because there's a small group of people that benefit, that decidedly benefit from manipulation of that rate. And once they cannot manipulate the rate any further, what they will go after is what is bare and what is apparent, which is the US dollars in our local banks. And they will come after it.
No, but I actually think, this is me merely speculating, that the reason why they moved away from central bank, it was because the central bank is a can of worms. There's so much corruption there. And I think part of the rate moving and the liquidity injection that was happening in the economy was being blamed on the Treasury. And the Treasury is actually taking instead and saying, no, henceforth, the RBZ has to be restricted to a bank. It's a bank. It's a government's bank. And I actually think it's actually progressive. Given the context, I don't think there's an ulterior motive. Are they not trying to ring fence a bad player?
Let me put it this way. If there were shenanigans that were happening in central bank, right, and we've continuously said this, that in any case the central bank should not have been part of the auction of distributing currency. It shouldn't be there. Anyway, it's a referee, and the referee shouldn't be a participant. But suppose there were shenanigans that were happening. What makes you so sure that those shenanigans will not happen at Treasury? I mean, if Treasury was on principle, was purely basing this on principle, then they would have done what Nigeria is doing. They would have said, no, this shouldn't be with the central bank. It should be with the market. It should be with the banks. But what they decided is to move the shenanigans from the central bank to Treasury.
So I'm going to push back to what you're saying.
They're better.
I'm going to push back. Tinashe. In fact, a week or two ago, you were making the case that there's a turf war going on, and my response was, look, you're reading the tea leaves, right? But I think that all the policy action that's taken place over the last week or two, actually 4 weeks with the rate moving aggressively, right, from being stuck somewhere to actually devaluing closer to where the power market is. I think the premium is, the gap has closed in percentage terms from 50% plus to significantly less than that. And I think these new rules where they're moving things to Treasury, I think they're progressive. I agree with Ranga. I think they're progressive. I think there is some reform
intention.
It hasn't manifested yet, but I think that's the intention. I'm going to give Treasury the benefit of the doubt here, that they want to move things in a better direction. Now, it remains to be seen whether it actually happens. But I don't think that. I think that there's fatigue from Treasury's perspective in the way the rate was being managed previously.
So they can manage it better.
They just want to try. They just want to try.
And based on the
Treasury can manage the rate better. I mean,
and based on what we've seen, right, with the rate being at what 6.8.
It's not about the rate, Rufaro. It's not about the rate. It's about the fundamentals. It's about the principles. If you believe in a fully liberalized market or some level of liberalization, then you should be bothered greatly that something is moving from one entity, which has actually some experience in running, albeit their troubles there, to an entity that has a pervasive incentive to destroy the market. Because what will happen...
What is Treasury's incentive to destroy the market, by the way?
What will happen if they get surrender requirements and they don't have the Zim dollar? Are they going to offer it to the market?
No, but they've got bills to pay.
So they're going to pay their bills?
Yes.
And they have
surrender requirements.
They've actually made a commitment.
Wait. Let's play this. Suppose they don't have money. They don't have the Zim dollars.
They actually say they've got Zim dollars.
No, suppose they don't have the Zim dollars. Suppose they don't have the Zim dollars, and they've got, they're now in their kitty, they have the surrender requirements dollars. Are they going to give the market the surrender requirements, or are they going to use? They've got contractors that they haven't paid. They have GMB farmers that they haven't paid. They have salaries that they need to pay. They've got foreign debts that they need to pay.
100%.
I think that central bank had good reason to pay its foreign debts. I think that they...
But why didn't they?
They have been servicing. If you look at Afrizone Bank, they've been servicing those, and it came out. They've been paying about 60 million. Whereas suddenly when you push it over to Treasury, what Treasury is going to do is whoever we owe, they can just turn their back on them and say, you know what, we've got high priority areas that we need to fix. We haven't paid our farmers, we haven't paid our electricity, and that's what we're going to focus on. Whereas the remit for central bank was very thin.
Look, Tinashe,
But anyway,
I will readily concede that you could be right. Okay, for that I'll give you. But I think that, so one of the reasons why I also look at this as a positive is the fact that when things aren't working, right, the worst thing that you can do is just keep doing things exactly the same way. So and clearly things haven't been working and we're shaking things up. So look, maybe it'll turn out that these changes are making things...
What are you going to actually use where Treasury now... Where else in the world does the Treasury run the exchange rate management system? Anyway, let's put it out to our viewers. Let us know, was what Treasury done, is that a good thing? Will they manage the exchange, the foreign exchange market better than central bank? And what will happen once it's there? Finally, people are jumping up and down that we have to end this, but we can't and we cannot end this if we don't talk about SI 108. This is the presidential powers used to rein in Mangujga, where it's now very explicit. They're saying Mangujga cannot borrow on his own behalf, he can't go on his own frolic.
Central bank.
It says the central bank governor. The SI.
But the central
as
bank
an office.
The
office, not Manguj.
The central bank.
Yeah.
You never know, it could
it's
be
the
you
central bank
next year.
Yes.
Well, there's a reason why I'm saying this, because the Reserve Bank Act is very explicit anyway, what the central bank governor must and cannot do. There was really no need for an SI, right, to impress upon that the central bank governor cannot do this. The Central Bank Act is very explicit on what the central bank can and cannot do. Why is this SI necessary?
I think
if not to just embarrass the current government.
I think the SI is actually an extension of what we have been seeing in the last 2 weeks, and is tied to the discussion we were just having about moving the auction and the surrender funds from central bank to Treasury. Clearly, Treasury is of the opinion that they can do things better, but you can't blame them because it's, the report card is out there on central bank in terms of how dismal that they've actually managed or failed to manage the monetary side. And over the years, even at the times of Gono and now Mangunja, there's a lot of quasi-fiscal activities. They're paying for this and that. So I think they were actually extending their mandate beyond what is probably permitted within the Act. And look, I'm happy to see how this one plays out, but it's very clear we are seeing a major shift away from the central bank. And I think the guys at the central bank should be, like, they should feel happy that at least going forward, they won't be blamed for whatever ills that will befall us. Okay. And let's see how the minister will be able to deal with the problems.
In Friedrich Hayek's book, Road to Serfdom,
I recommend that book strongly to everybody.
But you seem to be arguing contrary to that. His argument really is around, the road to hell is paved with good intentions. And we've seen the Treasury coming up with extremely good intentions.
Hold on, Tinashe. For the first time, he's actually acknowledging the intention.
I'm being sarcastic. In case you missed it.
Well, sarcasm is the lowest form of which I don't know whether you're aware.
Yes.
Okay.
No, so doing for a particular reason.
Okay.
But because I'm having the last word.
Okay.
So what I'm saying is the good intentions from Treasury, good intentions in courts, what we've read, every economic literature tells us that it's good intentions that lead us to hell. And if Treasury had the good principles, what they should have done is they should have handed over the market to the market participants, to people who are willing to pay for their currency, and not them who actually have a fiscal responsibility. Now they're taking over a monetary responsibility. I do not think that's the way to run economics. But hey, I'm willing and ready to be proved wrong. And kudos if they prove me wrong. We've got another year or two, or months, or weeks to find out if it works out. But let's hear what you guys think. We're more interested in hearing what you guys think. If you think this was a good policy measure, if you think that the rate moving is a good measure, and then finally we have solved our currency problems. Let's hear. Otherwise, have yourself a wonderful evening today and a great weekend. And we'll see you next time. Cheers.
Cheers.